Hi everyone, and welcome to this morning's webinar. And we are on Wednesday, so obviously you didn't get the email, but it's just for this week. We are back to Thursday next week. Thank you so much for coming along this morning. And before we start, as usual, I can see the recording is underway, but can I also draw your attention to the disclaimer that I know you can see on your screen. As you know, this can be a very risky business, so please don't ever use money that you cannot afford to lose. And as always, I'm here with my husband David, who's sitting not opposite me anymore, sitting just along from me, because we've changed the configuration of our trading space, so we can basically spy on one another. And as always, we'll be running this as a two-hander. I've got MT5. David's got, I think you've got Ninja Trader up today, haven't you? Yep, he's got Ninja Trader. Well, he always has Ninja Trader up. But as you know, we're also looking at TradeStation. So we've been playing around with the indicators on TradeStation as well. And it's all very, very exciting. We'll be looking at the markets through the prism of volume price analysis and also using the quantum trading tools. And I know we have visitors to this webinar where some of you already have the quantum tool. Some of you have already invested in our Forex program, and some of you may have, maybe it's your first visit to our webinar. And we know, as I said, we will do our best to explain the principles of volume price analysis and also showcase the tools to you. Volume price analysis, if you haven't come across it before, then you can discover all about the methodology that David and I have been using for the past 20 odd years on Amazon. There are several books, and for Forex, these have been bundled up together, what we call the Forex trading library. There's the concepts of VPA, how it applies to the Forex market in particular. There are also worked examples, and also the other book that's included is what we call the three-dimensional approach to Forex trading, where basically VPA is the, if you like, the technical analysis part, the chart reading. What is the chart telling us? What is it saying at the moment? But more importantly, what VPA does, it tells you where the chart is going next, what is going to happen next with the price action. But that's just one element of your analysis, because you also have to take account of the fundamental landscape, what's happening in terms of releases, and also look at related markets. This is something that David and I know other people call it intermarket analysis, or maybe cross-market analysis, but we actually look at related markets. In other words, how all the four capital markets interact with one another, how they kind of bounce off each other, how is the price action in one, how it's going to affect price action in another. And Forex very much sits at the heart of it sits at the heart of the market. It's where the money flows, and it's where sentiment flows the fastest, as it were. Is the dollar being bought? Is the dollar being sold? Is the yen being bought? Is the yen being sold? And it's this interrelationship and this the connections that exist between these markets. They're not all, correlation, yes, sometimes they correlate, sometimes correlations fall out, but you have to understand how they are interlinked, as it were. And this is what we explain in great detail in the education program, and we also cover in these webinars as well. And returning to the quantum tools that we've developed, these are the 4 specific Forex ones that we use to help us make sense of what is going on in this very complex market. It's not complicated, it's just complex. And we've got some fabulous examples to show you what's happened overnight with the New Zealand dollar. And I said earlier, we take this 3D approach, but more and more we're finding that there's a 4th element we have to account for. It's a kind of political element, and it's politics in its broadest sense. It's the politics, obviously, with what Donald Trump says, but also with the Fed. With the Federal Reserve, with all the central banks. The central bankers now have a huge influence. Individual members of the various central banks have huge influence on what is happening on the price action, and we had a great example of that yesterday on the US dollar. So you can have a fantastic technical setup on your charts, whether you use the, with the quantum tools, hopefully without the quantum tools, and then suddenly, if you're not aware that someone such as Jay Powell, such as Bullard is going to make a statement, such as or another central banker is going to say something, Draghi, for example, you're not aware that they are going to be, talking, making a statement. I can assure volatility suddenly hits the market. You'll be, the market makers will take this as a huge opportunity to, to take the money off you, and suddenly, you're either bounced out of a trade, or that setup that looked so perfect is suddenly, it's suddenly reversed against you. And as I said, and that's without the fundamental releases. It's almost as if fundamental releases, they have an effect, but they don't seem to have as much of an effect as someone like sort of dear old Bullard making a statement as he did yesterday. But we'll look at the charts, and we've developed some of the tools specifically to warn us, to give us that heads up that we know something. So even if you haven't got a news feed going, when you see that one or two of our indicators trigger, you will know something is going on, and you think, then you can make a decision, as particularly if you're in a trade. We'll explain that in more detail as we go along. And with regard to the indicators, we sell them individually. There are bundles, or you can buy the full package. There are advantages with just buying one. You can just try us. You can test us if you like. A lot of traders do. They test us in the sense they buy, and then they ask for a refund within the 7 days just to check us out, and then they come back and buy the same indicator again, or sometimes they buy a bundle of indicators. And if you buy a bundle and then you want to upgrade to the full package, you will always get a credit. Whatever you buy from us will always be credited to you for against any future purchases. The advantage of the package is that when we develop new indicators, they will be added to your package for free. So whatever you pay us for the full package, that is. And we've got some very exciting things planned for the rest of the year around more volume indicators. As I said, 7-day money back guarantee. At the moment, we have MT45, Ninja Trader, TradingView, and we are working on TradeStation. And all the details of the indicators, prices, deals, you can find at quantumtrading.com. I mentioned the Forex program. It's as we call it, the complete Forex program. As well as the program included in the cost is the full package of trading indicators. And what you have to decide is which platform you would like to use. And again, if you've bought anything from us, that will be credited towards the cost of the program. For example, we have full package customers who then want to upgrade to the program. You certainly don't have to buy the indicators again. If you do, we also have traders who buy a second license. We will give a 50% discount for a second license. So that's all explained at quantumtradingeducation.com. David, is there anything else you want to? Have I missed anything on that you want to say? I know you're happily talking to everybody in the room.
Yeah, absolutely.
Fine. Do you want to say anything, or should we crack on?
No, we crack on.
Brilliant. David has said I've covered everything. If you've got any questions, please just drop them into the chat box. We're happy to answer them, or we'll answer them on air. Right, I mentioned earlier on, let me see what we're looking at here. What have we got? We've actually been up since, what time did we get up? 5:45 this morning, wasn't it? Yeah, so we caught the tail end of what was happening on the Asia session. And we caught the opening of the European session, and now we're obviously moving towards the open of the London session. And as we have said on many occasions, this is certainly a 24-hour market. Clearly, it is. It just keeps on rolling. It's like a meandering river. And but just like a river, it doesn't have it doesn't flow equally. There are times when it's very slow, and other times when it picks up and it's very volatile. And I think one of the things that makes David and I very cross about the marketing of this this market, which is a fantastic market, by the way. It's an easy market to access, don't need a lot of money, and potentially it could be very lucrative for you. But there is this suggestion that somehow all the sessions, the 24-hour, in this 24 hours, if you like, the trading potential, the trading opportunities are equal. Well, they're not, because, as I said, there is participation levels differ. Sentiment will change within the sessions, and the sessions, by sessions I mean the time zone. So, for example, at the moment we've got London and Europe. We've got fundamental news that will apply to only Europe and the UK. So those currencies which are more closely connected to those time zones are more likely to move the most. And similarly in Asia, and you've got to understand the nuances of this market, because if you don't, if you have an expectation that you can just open your machine and then just find a trading opportunity, which you will, but not be aware that perhaps you're coming up to a crossover, or it's at the tail end of a session. For example, the London fix, all sorts of tricks and volatility come in. So as I said, you can see a perfect setup, and then you think, oh, well, what happened there? Well, it happened because, as I said, we've got another market coming in, or we're coming at the end of a market, for example, the London fix. Right, I'm just going to stop about that, because I just want to go to very, very quickly, just before London opens, let's see what's been going on. And going back to the specific Forex indicators that we have developed, what we've done is the currency strength indicator. I'll just push that down a little bit. This is, those of you who have it already will know, this is where we have deconstructed this market into individual currencies. So every line represents a currency, and the currency that we have been looking at this morning is actually the sale of the British pound, which is this yellow line here. You see it's falling. It's falling quite strongly. This is on the 12-minute chart. I usually have three of these, three time frames for the CSI, but what I've also put here is our matrix, because what the matrix does, it then takes the price action that is going on in the individual currencies and matches it up with what pairs, which of the pairs are moving the most strongly. I've just highlighted the British pound, but I can take that off. We can see here, and at the moment in this time frame, we have the Aussie dollar at the top. There's clearly been some strong buying in the Aussie dollar, and we can see the Aussie here. This is this blue line, which is rising strongly. And as I said, I was looking at the British pound earlier, and in fact, on all the time frames, right up to the hourly chart, which I'll move up here, all the pound pairs were very much slam dunk at the bottom. And in fact, the weakest was the pound New Zealand, and it is still actually the weakest. And there is a reason for that, because there was also some volatility in the New Zealand following the interest rate decision by the RN. Was it the Royal? Was it the RB and the RBNZ? Excuse me. So the way we use the CSI is, first of all, to see what has been happening to the individual currencies. As I said, this is a continuum. Prices just keep on rolling. So we just come in at different times. We want to see what's being bought, what's being sold. Why is the reason for why is it being bought? Why is it being sold? Well, the economic calendar will tell us. Then we want to see, well, what's happening at the moment with the individual currencies, and then we want to have a look at the currency pairs, just to see, well, is there a potential for a trade in the pound New Zealand? Because the way we look at this is we look at the extremes. What these extremes tell us is that at some point these currencies are going to reverse. This is a market of mean reversion. It's like a sine wave. You can see the lines always, they rise, they fall. Sometimes they don't. They may go sideways for a bit, but they rise. This is the Japanese yen. It goes sideways for a bit, then it falls. Now it's at the bottom. The chances are it will then rise. And those are the moves that we are looking to capture. In fact, all traders do. All traders they fall into two camps. They are reversal traders. How you determine your reversals, whether it's an overbought on oversold, supply and demand, accumulation and distribution, essentially what you are doing is you are buying low and you are selling high. That is it. The only alternative to that is when you are looking for a breakaway, when a market or a chart is in consolidation, and it's in consolidation for all sorts of reasons. It's moving sideways, and then you'll be looking for the move to go in one direction or another. Consolidation, we have an indicator for that, the volume point of control. In fact, I've got a perfect example of that here. This is the 3-minute chart of the pound yen. Let's go and look at it back here. This is the volume point of control, this yellow line. You can see this congestion. You can see prices are restricted to within a range. Why? Well, I've got a pivot high, I've got a pivot low. I've also got fractals on here as well. It's really not going anywhere. If you like, we call it the fulcrum of the market. Another word you could use, it's imbalance. The traders are happy to transact within this range. There is no divergence. There is no clear divergence one way or another. When we had a little bit of divergence here, we had a little fall, but was it a fake out? Possibly. Was there enough of a move, enough pips in that move? Possibly, before it went back to the volume point of control. But the actual move lower was from here. This is where this big move came, and there was a clear divergence, and that was what was highlighted on the CSI and also on the matrix. The reason for a chart being in balance, if you like, being in consolidation, in congestion, all sorts of reasons. Ahead of a piece of fundamental news, a quiet period in the market, perhaps this pair isn't being traded very much at this particular time. There could be all sorts of reasons. But if you understand how a chart, if you like, the structure of the chart, what is it, what is happening at any given time, at least you will be able to judge what is likely to be happening to happen next. And with volume price analysis will then confirm or validate the move that you are seeing on your chart. I'm going to stop there. I'm going to pass to David. As I said, there's lots of fundamental bits and pieces that I want to cover as well with the price action. I was on the pound yen, and I was actually using, I'm sorry, my Renko goes a bit, the template seems to fall out with the GoToWebinar while GoToWebinar is on, and I don't know why. It seems to interfere in it. But this is a Renko, this is a non-time based chart. And what it does, it helps with entries, it helps to keep you in during periods of volatility, and it helps to get you out. But we'll talk about that when we look for some trades later on. I'm just going to pass over to David.
Good morning, everyone, and straight into it. I've got the pound Aussie. David mentioned in the chat box there about the Aussie a minute, and I've had this up for a while. Just close that out of the way. Hopefully you can see my screen. Just looking across at Anna's. Great. Okay. As I say, this is the pound Aussie. Time frames wise, got the 1 minute, 3 minute, 5 minute up at the top line and down onto 10, 15, and over onto the daily. And part of the reason for getting into this one, it's being driven by many different factors, but not least of all the reaction in the New Zealand, which has also had a reaction into the Aussie, because what you tend to see, a very close relationship, both geographically and commercially, close trading nations, close trading partners. So you will tend to see, whenever you get reactions in either of those commodity currencies, or indeed the Canadian as well to a lesser extent, but certainly pound Aussie, you will see it with this morning's news was all about New Zealand dollar, but it's flipped over into the Aussie as well. Pretty strong buying of the Aussie, as you can see here. What's nice about it is some really great lessons up onto the 1 minute. And this is really about reading the chart, reading what's coming in, identifying the volume opportunities, just looking at it from the perspective of, what am I seeing? What's the volume doing? What's interesting? Let's go to the 3, actually. I think that's the one I was looking at. There we go. you've got everything here. You've got the volume point of control, you've got the volume histogram, you've got low volume nodes, we had a big spike in volume here, which is unusual. This timestamp down here, this is over to 350, middle of the night for us. This is basically the follow through from New Zealand reaction. But then what's interesting, around 6:20, 6:30 our time, so this is 7 o'clock, this is the European Open here. So in this sort of half-hour section, we had quite a big increase in volume, which is unusual, because usually what you see coming out of Asia, sorry, I've got Harry barking in the background, apologies. Usually, I'll just switch off for a moment, sorry about that. I think he's quieting down, apologies. For those of you who come along regularly, you know we have two dogs, Bertie and Harry, like to join in occasionally. What we've got here is an unusual spike in volume, as I say, which came in over this half-hour period. Normally what you'd expect to see coming out of a Far East Asia is a gentle decline, then a pickup into Europe around here, and then obviously we're going to expect a spike in volume as London opens. What we got here was unusual. It's nice to read it from a chart perspective. When you see big volume increases like this, you look at what is the volume profile telling me? If you're getting a big spike in volume and the market's not going anywhere, it's hardly a sign of strength. It's generally a sign of weakness, particularly in the down rally. You can see here we had this nice move lower, the break away from the volume point of control. Then we get two up candles. What have we got in the up candles? We've got falling volume. Is that a sign of weakness or a sign of strength? It's a sign of weakness, because if this market was going to rally further, what you would expect to see is rising price, rising volume. It hasn't. It's rallied two candles, weakness in the candle itself anyway from a price perspective, and falling volume on those two anyway. So it's hardly going to rally very far. In addition to that, we then ran into some pretty decent resistance, price-based resistance. This is on the accumulation distribution indicator. This looks at price. It moves up and down. It's constantly rebuilding, as you can see. As these levels are tested and retested all the time, it's constantly building them as the price develops through the various time frames. Then in addition to that, we've got the low volume nodes here. This is the volume point of control itself, where we have the heaviest volume, but not by a great distance. This is pretty close. This is pretty close as well. But as you get to these low volume regions, what you'll see is the price action move through pretty quickly, because from a volume pace perspective, there's very little around these regions to prevent the market from moving through quickly. So from an anticipatory perspective in terms of what is like to happen next, as you come to these regions here, we had a decent platform of price-based support here, bounced off that for a while. Then we go through this region pretty quickly. Now we're starting to build some volume down at this region, so we're expecting congestion. But the principles of volume price analysis apply whatever time frame you are trading. You can see here on these last two candles, we had falling price, falling volume. So what is that telling you? It's telling you that at that particular point, expect to see the market maybe congest or maybe have a little rally, which is what it's doing at the moment, because the selling pressure here is diminishing. It's falling away. If this is going to sell off very strongly, then you want to see rising, you want to see falling price and rising volume. You haven't. You've got this anomalous situation of falling price and falling volume. So you expect to see a rally at the very least, which from a trading perspective is what you want to know. You're anticipating what's happening next. In addition to that, when you scan over onto the 1 minute, for example, we saw this little move lower here. Now we've got rising volume. We've got narrowing spread. So what's that telling us? It's telling us there's buying coming in under these two candles. Not so much under this one, but certainly under this one, because you've got higher volume here than this one, and therefore, all things being equal, what you expect to see is this to be a wider spread candle than this one. It isn't. So you've got some buying coming in at that point, and some decent buying as well. So from a trading perspective, don't be surprised to see the market rally a little bit. The trend line is starting to climb, as you would expect, up back to the fulcrum at 0. And that's really what it's all about. It's just anticipating. And the other reason I wanted to pull this up was because when you look at it from, you may be an intraday trader, which is all well and good. Most traders are. Whether you're scalping or you're trading slower time frames, you're basically trading intraday most of the time. And when you look at the daily chart, it just gives you a perspective on what the sentiment towards that particular currency pair is on a relatively slow time frame, and perhaps what to expect in the day that follows, the day ahead. We had this rally high, we had a lot of wicks to the upper body, and it's telling us basically it is pretty weak, this particular pair. We ran into some decent price-based resistance at this region. We're trading around the volume point of control, so we're not expecting this to go very far for the time being. We had long-legged doji the other day. Market tried to rally, was capped off again. Ton of volume sitting around this region. Then we had a downspread candle the day before last on decent volume, and then we had this effort to rise. Big wick to the upper body, falling away. It's a sign of weakness, particularly if you set it against the framework of this lot over here. And in addition to that, what happened yesterday, as you can see here, we went through this level at, where are we, 82.50 odd on this blue dashed line. Pretty strong. It was a platform at that point during the day, but it was actually breached during the session, closed below it. And then you can see here how in the session that's opened up so far today, the market's tried to rally, hit that level, bounced off, and now we're pushing lower. So in terms of looking at the daily chart, just looking at this whole region of price from an intraday perspective, and I appreciate that you can make money on both sides depending on what speed you're scalping at. You might be on a 15-second chart, in which case you could be trading long and making money, and the trader on a 3-minute or a 5-minute short-term bearish chart is making money also. I do appreciate that. But when you look at it from that perspective, the balance of probability, if you will, is that this market is looking pretty weak. It doesn't automatically follow through that this today is going to be a down day, but certainly just looking at that perspective of that candle and certainly what's gone before, that's your anticipation, is that the probability is that as an intraday trader, you're more likely to be trading this to the short side than you are to the long side. And really, that's what it comes down to. What's also interesting about this, in terms of the volume perspective as well, look at the amount of volume we've got here, and when you compare it over here, this region where we had this rally, big widespread candles, but look at the volume under it. It looks pretty weak now, and really, it just gives you perspective on how to compare volume, what's gone before. It's all about historical analysis of the volume profiles, trying to find benchmark candles for your volume profile, and reading it in that way. Drop that out of the way, see what's going on. We're back to the fast charts again. What you'll also notice about this is you've got the trend monitor. We've got some a little bit of sentiment change here coming on the trend monitor. Excuse me, I'm just going to switch off for a moment. Yep, sorry about that. You can see here we've got a slight shift in sentiment. So the trend monitor is picking up the fact that we've got this little rally appeared here. Is this going to be significant? Well, if it is going to be significant, then it'll appear over here on the trend monitor. And so far, we've seen nothing. It's just maintained its current color, bright red over here. No change, no change, no change. So in terms of the sentiment towards pound Aussie for the time being, excuse me. It's still very bearish. It remains bearish, unless, of course, you're looking at this as a scalping opportunity to jump in and grab a couple of pips to the upside. But for the longer term, in inverted commas, this is remaining as we were in the downwards trend. And that's the power of an indicator as opposed to the power of reading volume price analysis. And it's using the two in combination to help you make sense of what is likely to happen next. It really is that simple. So it's volume price analysis is the underlying methodology, and then the indicators will help. And the trend monitor is one that helps more than any other, probably, in terms of once you're in a position, using it in multiple time frames like this to help you identify whether the trend has actually truly changed or not. Has it reversed from what was very bearish sentiment into now what we think might be very bullish sentiment? And that will only happen when you see a change from primary bearish to primary bullish. And part of the beauty of using VPA is also in helping to identify, it's one of the key areas we cover a lot in the education program, is really trying to understand whether what you're seeing right now is a change from bearish sentiment to bullish sentiment. And part of that will be reflected through the trend monitor. You can see here, flip-flopping around. We're starting to see some decent buying coming in. What we've also got triggered now on one is a volatility. And as you can see here, this is triggered before the bar's actually closed. Now it's closed. Now we've got London Open. So we're coming straight into the London Open. What do we expect at the London Open? Two things. First of all, volatility, and secondly, the opportunity for reversal trading. I know a lot of our customers, that's what they do. They hunt this out, particularly the 8 o'clock session, because it's a classic time for looking for those opportunities for reversal in sentiment, what's gone on before. We're literally opening up now on the 1 minute. And the reason it's so powerful is because it is the ideal opportunity for the market makers. It's one of those marker posts in the ground on the 24-hour cycle that is absolutely fixed in concrete, and they know it. A lot of traders don't know it, they don't appreciate it, but for them it's just a great way to make money very, very easily, very, very quickly. Just reverse what's going on before. Traders looking at their screens going, oh, why has that happened? Well, it's the London Open. So, you know, it's very much the same as the London Fix. The London Fix is another classic example. If you're trading around the London Fix around 3:45, 3:50 our time into 4 o'clock and beyond, it's a great, great opportunity to make money relatively quickly and relatively easily if you know what you're doing and you understand it. So what we're seeing right now is nothing more, nothing less than the opening of the London market. We get the increase in volume, which is what we expect. We're seeing it here. And if this is going to be a true reversal, then you expect to see the trend monitor over here gradually transition through to different colors as this takes hold. And if it's not, then you'll see this flip back to either a darker red. It could even go back into a brighter red immediately. Just pop that up full size, make it a little bit easier on the eye. And of course, the other aspect you're anticipating, once the volatility is triggered, we're expecting to see the market congest at the very least, or possibly reverse. And what we're seeing right now is precisely that. We've got a pivot up here. We've got a little doji candle. We're inside the spread of that candle. And all those traders who jumped into this are going, oh dear, what's happening now? Pressure, 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 not sure, don't know, oh dear. I was a little bit, I shouldn't have done that. Trader regret and all that, and now the squeeze is coming on. It's just what happens at the London Open. You can also see up here we've got a very nice area of price resistance. The way the accumulation distribution indicator works on Ninja is slightly different to the way it works on MT5 and MT4, in that it prints this line thicker the greater the number of times that region has been tested either from above or below. So the thicker the line, basically, then the more dense is the platform of support or ceiling of resistance. So, for example, this region here is a stronger region than this one here. Not by a lot, but it is stronger. This one up here is very strong. This one here also is very strong. So trading around the volume point of control here, you've got a really strong ceiling above, a very strong platform below, and you've got the volume point of control. So as it breaks away from this region in this little move to the downside earlier on, this is just a massive, massive example of the power of breakaway trading. If that is your tactic, you may not wish to trade breakaways, but I can assure you, if you're using the tools and indicators like this, you're breaking away from these congestion zones. You've got virtually no volume down here, so you expect the market to move pretty rapidly through there. You've also got rising volume here and a falling market. It's not difficult to assess the situation and make some money as a scalping trader, or holding this for the longer term, or just reading this chart in conjunction with what else you've got in different time frames. It really is relatively straightforward. I'm not saying it's easy, but it's relatively straightforward. And in addition to that, the beauty of a region like this and making money breaking away from this area is that placement of stop loss, which is absolutely critical. You've got such a clear place to locate your stop loss, with such a strong barrier between you and the market. I mean, any stop loss up at this region, you've got this massive barrier in place. So, what more could you wish for than placing your stop loss above here? You've got all the comfort of this density of resistance in case the market does reverse against you, and in you go. It's pretty relaxed trading, let's be honest about it. We've had the rally into the volatility indicator, and that's the power of the volatility indicator. not only does it trigger in real time, but again, it's anticipating what is likely to happen next. If you're in a trade and you get it triggered, you've got a decision make. I've said this many times before. You know, if you're an uptrend or downtrend and you've got some decent money in the bank and the volatility is triggered, generally speaking, I would say 99 times, excuse me. I would say 99 times out of 100, I'll close out because I don't want to sit through it. If it follows through in this example, if you know, we had maybe a couple of bars of congestion and then we followed through, fine, you just jump back in, depending on what the chart's telling you. But I don't particularly want to sit through congestion, so if I've got some decent money in the bank, I'll close it out and take my money off the table. Or maybe if I'm running several contracts or several lots or whatever it may be, then I'll close partially out, take half off, or take 3/4, or maybe, you know, leave a couple to run or whatever. So again, it's a nice example. We've gone through that reversal. We've had the volatility. Market makers have made some decent cash on that one, trapped a load of traders into a weak position, and now we're off down to the downside again. The trend monitor, it flickered around here. We had some transitional colors. We're back into bright red, looks like it, but nothing over here. And what's also interesting when you look at this from a perspective of multiple time frames, what have we got here? Is this strong or weak? Well, patently it's weak. We've got a ton of volume coming in here. We've got the market trying to rally. Just cleared that resistance, but bounced off it, closed down, narrow spread candle, high volume. What's that telling you? Pretty straightforward. You know, market's going lower. Okay. And the same over here. Same on 5, repeat on 5. There we go. You know, it's just straightforward. I can't think of another word. Just going to pass back to Anna.
I didn't even go to this. Yes, right. What I wanted to do something on multiple timeframes, but I think I'm going to do it in the next webinar. We've got 2 more on how you can use them for trying to pick, particularly when a move is underway. And what I've been looking at, not the optimum timeframes to look at, but some suggestions that you might like to consider. And in fact, the pound Aussie is just such a great example of, it illustrates what I want to say much easier than if I try and explain it just verbally. Right, if we go back to what David was saying on the daily chart, and what is the bias of what the daily chart is actually is actually telling us. That's right, David, I've got it. Sorry. Yeah, I've got it. It's telling us, and you can see here, this is actually a very strong down move that we've seen in the pound. This is simply reflecting the parlous state that the pound is in at the moment. Then we had this sort of counter rally that we have here on the daily chart. But as you can see, as the candles are going up, we've got wicks to the tops of the candles. So although it's a rally higher, it's a very weak rally, because none of these candles managed to close out as a wide-ranging candle. All of them had selling within the candles. Now we're on, this is the price move, this is the price action that we're looking at the moment. So you come to this chart, as I said, the prices are in a continuum, and what we have to do is try and pick a spot in that continuum where we can possibly take a trade. So I look at the daily chart. This is if we're perhaps looking at a longer term trade, as it were. And I look at that, and it's clearly in a downtrend. We think, well, how am I going to try and find a spot to get in? And this is something I came across, and that is when you can use something like the hourly chart. I think you can do it the 4-hour and the 6 hours, but I've gone down to the hour because when we're talking about the volume point of control, there is a point in any price action on any chart when the price action will go into some kind of consolidation, as I said earlier, where there is going to be a period where really it's not going to be doing very, very much, or it's going to be it'll be contained within a range. Now this is the hourly chart, so just bear that in mind. And here we have the volume point of control. And if you like, the point that you could possibly try and look and say, look, I know this is very bearish, but I've got to find a place where potentially I could get into this trade. And looking back at the VPOC, when we were looking at weakness for this particular pair, you can see at times when it has tried to pull away, and we have had a move lower, then we went into some more consolidation, then it actually went back to retest it. And that is, I suppose, what a lot of people, a lot of traders don't like about breakaway, is that you can get, if you like, these fake outs. So the price action retested the volume point of control. Then we had a volatility candle. Again, with a volatility candle, we know that potentially the price will reverse to within the spread of the candle. It did reverse within the spread of this candle, and this is where we have had now this clean break. So if you look back at that, where is that? That's at 83.30. 83.33, and you go back to the daily chart and you look roughly where 83.33 is actually on here, 83.07.33. It's about there. It's at that point there. 83. It's roughly in there. It's at that. It's at this level here. This is a bit. Is it a bit higher? Sorry.
Yeah. Sorry, you're right. You're on.
80.
It's on that line. 83.
Yeah. Where am I? 83. 83. It's above that one.
Between those two.
Yeah, it's actually at my 80s, about there. It's at my 200 MA. There we are. So we can see here, it's actually on this candle here where we have this very deep wick to the candle. So we know there's weakness to come. And to find your, what I'm trying to say is to try and find an entry, what you can do is you go down to a faster time frame, i.e. in this case on the hour, look at it there, and that is the move that we are in at the moment. It's not perfect. We don't pretend that it can be perfect, but at least with the VPOC, you know that could you have entered here? Yes. The advantage of breakaway and using something like the VPOC is you actually use very, very tight stops. Reversal trades are fine and they're fantastic, but you do have to keep wider stops. And because what the VPOC does, it gives you your natural area of placing a stop loss. So yes, you may have times when you'll be stopped out, but eventually you will capture a big move and your stop loss, your losses will be very, very small. Is that anything you want to add to that? Is that okay? Now,
I mean, yeah, the other thing with that.
Yeah, do you want to say something? Because I just want to go down to the faster one. Yeah.
Just to hear me okay? Yeah, just to pick up on that. Again, it's another example of congestion zones, of support and resistance. As I highlighted on the Ninja, the support and resistance indicator works a little bit differently on MT4 and MT5, where you have the solid lines. The solid lines represent those regions of deeper price support or resistance, and the dashed lines are less severe. And of course, where you get clustered of them, which indeed was the case through 82.36, 82.23, you've got two of them there. Once that region has been breached, then again, it becomes a very strong area of price resistance because you've got a cluster of two pretty close together. So again, just going back to the breakaway principle, once you move through an area like that, then you've got a very, very strong region of resistance in overhead. And in addition to that, you've also got a very deep histogram on the volume point of control itself in that area. So you've got three reasons really to look at that and consider that as an opportunity. As you can see there, the trend dots maintaining bright red. They're sitting over the top of the candle, so they're adding downwards pressure, which is nice. You've got rising volume, but then you've got rising volume on those last three candles pretty much as a result of the move through the session. So we're coming out of Far East into Europe and now into London. So you're starting to see an increase in volume anyway, which is a natural part and parcel of session trading across on a 1 hour chart. So you've got to be a little bit careful, but nevertheless, you know, the last candle there, just confirms the bearish sentiment. You've got good strong volume, well above average, and you've got some minor wicks top and bottom, but you know, it's still pretty bearish. Trend monitor, as you would expect, is bright red, no change there, not a flicker. And on we go. And as we come down now on the chart, what are you looking at in terms of the volume? On the histogram, it's very lightweight, so there's not a great deal. You've got a low volume node immediately below now, which has been tested, where that sort of browny line is. So we're coming down to another region of very light volume. And the way to do this, obviously, is you're moving up and down the time frame. So if you're coming to a region where perhaps you're running out of volume histogram, for example, on the VPOT, then you just go to a different time frame, a slower time frame. You look at it there, see what's going on. It's exactly the same principle. However you're trading, it doesn't matter whether you're on a 1 minute, 5 minute combination or an hourly, daily, whatever it is. You're constantly up and down to look at the signals, the bits of the puzzle that are coming in to tell you, what have I got ahead? For example, this is a nice example. You look at, sorry, what was that one you were on just there? Was it? That was on well, because just I've got lots of time frames. That one. There we go. Just there. Well, there we are. That's okay. This is a 3 hour. So you look at the 3 hour and you think, well, what have I got on the 3 hour? And you can just eyeball it. You can see the extent of a possible pause point. Why is the market possibly pausing at this point on a very slow time frame? Well, you've got a very strong platform there in at 58. It's gone through, it's come back. It may, you know, depending on how this candle closes, it may close above, it may close below. We don't know at the moment, but it is another reason to expect some sort of pause point, some sort of congestion to build. You can see over there on the left-hand side, we don't spend enough time looking at the left-hand side of the chart. You can see there what happened. That's the reason it's pretty strong. It was tested several times and actually created a platform for a pretty strong rally. So, you know, don't be surprised to see the market pause at that point, because there's something on a slower time frame chart that is giving you that information. And always remember that what you see on a slower time frame chart will always carry more weight than anything you see on a fast chart. So what you're seeing on a 1 minute or a 5 minute chart may be important, but if something significant is happening over on a 1 hour or 3 hour or 4, that is going to carry far more weight, purely because it has the aspect of time wrapped around it. If you've got resistance on a 4 hour chart or an hourly chart, that has the element of time. The market has been there for a long time, and therefore, by extension, that is going to be a much stronger region than the same equivalent on a 1 minute or a 5 minute. It's part of the reason that within the currency heat map, for example, we weight everything in terms of the ranking ladder, because bearish sentiment on a daily or a weekly time frame will carry much more weight in terms of that ranking than bearish sentiment on a 1 minute or 3 minutes or 5. It sounds common sense, and to an extent it is common sense. But then it's applying that to a trading perspective and just bearing that in mind all the while, that slower time frames will always trump faster time frames, whether that's support and resistance, whether it's volume point of control, whether it's volatility, whatever it is, doesn't matter. I'm just going to pass back to Anna.
Okay, and again, we've got that strong support on the 3 hour, but if you go back to the 4, we've got it here as well at 81.37. So if it does actually manage to get through that one, this is where it'll likely to bounce off again, because again, look over to the left. This is where it reversals. So within the trend, you will have areas on the chart where you will have had these reversals in terms of supply and demand. There was buying down here, so it pushed the price higher. Now this is if you're looking at the slower time frame chart. So you look at the wick to that candle. What is that actually telling you on the faster time frames? Are we actually looking at a reversal, at a potential move higher, and is it going to give us the opportunity for a trade to the long side? It is going to be counter to what we are seeing on the slower time frames, but it depends on your time frame. This is what David said earlier. Two traders be looking at a combination of charts. One will be going long, one will be going short, but they will both potentially be able to make money. That the issue comes is that when we get into a trade and it goes against us, and then we move out of our preferred time frames, just to see if we can find some kind of confirmation that our original decision, although it's going against us at the moment, is actually the correct one. And this is where a lot of traders get really, really mixed up. Going counter also comes with perhaps some additional risk, particularly if it's got a pound in. The pound is so beaten down, so everybody is trying to sell it, but that doesn't mean there is not going to be an opportunity to buy it. But as long as you're aware that yes, you may be going against the overwhelming sentiment for the British pound, and you're aware of that, and possibly you're not going to be in the trade for very long, you have to trade what you see on the chart, and you have to stick to the time frames that you have selected. So if you are on a Renko and on a 3-minute chart as here, then you stick with it. So if you see the potential for a buy, then you go for it. And how do you confirm or validate that decision? Well, VPA will help you validate it for you. This is the little move higher that we're seeing here. We see these 3 candles. There's been some buying coming in at the bottom of this candle here because we've got a wick to the bottom. But look at the candles as they're going up. The volume is falling. So what does that tell you? Well, it's probably not going to go very far. But sometimes there's enough of a move in it to, you know, if it's a very wide-ranging pair, to be able to say, yeah, I'm going to take, you know, aggressive, and it's a more aggressive way of trading. Or you say, no, I'm going to stick with the sentiment that that I can see on the chart. I said I've got the daily, I've got the 4-hour. In fact, that wick's actually been, it looks like it's going to be taken out. No, I'm going to stick with that, and I'm actually going to use that, you know, as an opportunity to either stay in, add to my positions, or if I'm not in it at the moment. The most difficult thing is if you've missed if you've missed an opportunity, this is where you have to go and see, is that, I'm on the 3-minute chart at the moment. Let me have a look, see what the 1 minute, these little periods. Exactly, it's answered the question for me. These periods of congestion, these pauses, these pullbacks, when the price just stops doing what it's doing, is this an opportunity to perhaps re-enter this bearish trade? You can see on the 1-minute chart the oscillations, the if you like, not the choppiness, it's where the price is going. You're getting bullish and bearish, as I was saying. It's being played out in great detail on the faster charts. On the slower charts, it's obviously all smoothed out. So you could say, well, okay, that's the pullback there. The volume, it's falling down, it's falling here. I've got the VPOC here. That is possibly another entry point. I've missed the big move, but I know everything is bearish. Well, you know, maybe I can use this. And but in terms of the risk on the trade, it's much less. Why? Because I'm going with the prevailing sentiment on the slower charts, and also I know where my stop is going to be. It's going to be very, very close to my entry. It's just above here. There's this period of congestion here, and you know, that's even less risk. So that I've taken away not only the financial risk, but I'm also taking away as much as possible the risk on the trade. And then by having a non-time based chart, let me put my template back on because the GoToWebinar is causing me all sorts of issues. What the Renko has done, it's actually smoothed out this price action. In fact, it's from here. What I look for on Renko is a move into bright red dots and bright red on the trend monitor. I'll just do it again. I'm sorry about this. I'm going to have to try and get this fixed with our developers. I don't know why GoToWebinar just seems to interfere with my it's just the Renko. I don't know why it doesn't seem to like the Renko GoToWebinar. So you can see here, it's gone into little periods of consolidation. Didn't actually go to bright blue. Very, very choppy price action. Back here would have been, you know, I'd have to look at see what the time chart was doing as well. But when you do get the dots and the monitor going bright red, then it's a really good place to be. And also I've got these thicker lines of support and resistance. It's gone below this support. That's going to provide resistance, and it's hopefully going to carry on lower. So using the VPOC in other time frames to help you with entries is also a great way of being able to enter an existing trend with a degree of confidence, and also looking at what the volume price analysis is telling you as to whether the move that you are seeing is actually is it valid or not. And as I said, these three candles here, these three candles with that volume there, no, I would suggest it wasn't valid. We have got this light. This is the key level now, 81.54. Strong support. It has managed to get through on reasonable volume. The next candle is now going to be critical, and that will act as resistance. Anything else you want to say to that, David?
Yeah, absolutely. And I've always got something to say, as I'm sure you all know. It's just, again, I referred to it earlier on about this whole business of VPA and applying it not just to entries, but the power of helping to keep you in conjunction with the indicators and everything else. And this is, again, a nice example of what I was referring to earlier, which is primary to secondary and what looks like back out to primary again. In other words, that rally of the three candles, the three blue candles, you've got rising price and falling volume. So that's not a sign of strength, it's a sign of weakness, it's an anomaly. And it's just giving you a heads up that this is not actually a true reversal, this is just a minor blip. It's a pullback because you've got falling volume and rising price, and therefore what you're expecting is for that market to roll and to continue the bearish trend. In addition to that, the trend monitor you can see there never flickered. The trend dots always change first because they're very, very close to the price action. So the trend dots will always give you the heads up to, you know, the what's the word? The micro aspect of price behavior. Whereas the trend monitor takes a much more considered view. It's looking at a longer term perspective on the trend and whether it is actually a true change in trend. And that's why you get the transitional colors, because it's starting to detect that. But the power of the trend monitor is using it in multiple time frames, because if it is a true change in trend from primary to primary, then that will ripple through your time frames from one chart to from the fastest into the next one, then on down to the next one, and so on and so forth. And that's what you're looking for the whole time. Just going to pass back to Anna. I would also say, just to cap it, please use the Renko with your time-based charts, because it's such a powerful indicator to have alongside. Anna's just going to put the template back on there. I don't know why it keeps dropping up. Something to do with GoToWebinar. We'll take a look at that as well. So please use time-based charts and non-time-based charts, because they really do help. Because the Renko reveals momentum. Not only does it smooth the price action, but it also reveals momentum, because it's non-time based. So it's based on either the metric of what you've prescribed for your Renko setting, pips, the number of pips, or it uses the optimal setting, which is part and parcel of the indicator, where it gives you the optimal setting for that particular pair and that particular time frame during the session. I'm just going to pass back to Anna.
And of course, you'd also have the CSI. Let's have a look here. What have I got here? This is actually on the 30-minute. Are we looking at this? Is it's very, very overextended. Let's have a look. Let's just take it off the dot. Take it to 10 minutes here. What have we got here? In fact, that's beginning to roll over on the, no, it rolled over, then it's going back up again. The pound is turning up slightly as well. But currencies and currency pairs can stay overbought and oversold, as I've always said, a lot longer than you and I can stay solvent. Anyway, I think we're going to stop there. Is that okay, David? Yeah. I didn't quite cover what I was going to cover about the dollar, which I'll actually do in the next session, because that is the US session, and also much more about central banks. I've got a couple of interesting interesting sites for macro news that I'd like to share with you, and I'll put that up in our next webinar. So all it remains is for me to say thank you so much for coming along. I hope you've enjoyed what we've gone through, and have a wonderful day's trading, and we'll catch you next time. And we are back on Thursday next week. So as I said, have a great day's trading. Enjoy the rest of the trading week and weekend, and we'll see you next